So what's an engulf, right? So most of you view an engulf from a very old perspective, especially where some of you were viewing the market from an ICT or SMC perspective or supply and demand perspective. That might work. These perspectives might work, but they're not as effective, right? So I'm going to show you the right way to spot your engulfs. So in the structure, you have bullish trend, right? You have a bearish trend, and then you have a consolidating trend. In a consolidating trend, you have both markets. So you have a bullish market and you have a bearish market. So how can you capitalize and take trades in all of these three models right here? So an engulf, okay, for some people is basically the last push up before the down move, or the last push down before an up move. I'll give you an example. So let's say price is going down and then it goes up, right? So here you have like 3 red candles. Some people take the last red candle, right? And then spot that as an engulf for price to pull back to it, then go up. Now, in some examples, we might use that engulf, but it has to have basically two conditions, right? What are these two conditions? The first one is a good historical data, okay? This basically represents 20% of the engulf, okay, if it's good or not. So if you have an engulf and the only condition that it has is this, then the engulf is bad. If the engulf has the second condition, which is the 80% left, which is called ISL, right? If it has the ISL. So what's that? Okay, let's take a look at a normal engulf example. So as you can see here, you see this push down, right? See this push down. This is the last bullish candle before it started going down. So some people would take this engulf, right? So this is not correct. Okay, this is wrong. The first thing you should look at is a good historical data. What does that mean? You're going to draw that box to the very left and you're going to check if you have at least 3 or 4 rejections. What do I mean by that? If this zone is good, you will see in the past that price is respecting it. As you can see here, price is just going through it once, twice, 3 times. It's not respecting it. You see, we only respected here like once, and this is not even a good rejection. We want something like this, but for many times. As you can see here, we only have price respecting it just right here. Here it broke it once, twice, 3 times. We don't want to use these areas, right? So that you have to find an area that has some reaction. So let's see, where did this sell-off came from? So it came from a certain engulf in here, right? If you take a look at how price respects it. Look at this, first rejection, second rejection, right? Even if it breaks, it will come back and retest it. Look at that precision, and then go up again. We have once, twice, 3 times, right? This is enough for you to say that this area is good. So that's the first thing you're going to spot, right? The second thing is the ISL, right? The ISL. What does that mean? So you have to ask yourself a simple question. If you want to look for sells, when price is going down, right? If you want to look for sells, you have to check the low of that engulf, as you can see here. This is the engulf, right? You have to check the low of that if it took the low of the previous candle prior to it. So where's the previous candlestick? It's right here. Did this low take the previous low of this candlestick? No, it didn't. So this engulf is simply bad, right? What do you do in this scenario? You simply go one candlestick after, okay? You go one step after. So in this case, we're going to be taking this engulf. How many times can you do this? You can do it only 2 times. So you start with the bullish candle, right? You start with a bullish candle. If it doesn't have the ISL condition, you go one more. If this one doesn't have that condition as well, you go for the second time, which is the last one, okay? So now you ask yourself the question again, did this low take the low of the previous candlestick? Yes, it did. So this is your valid engulf, right? This is your valid engulf, and this is where you're going to be selling from. Also, do not forget to check for the historical data of a certain engulf. Now, let's take a look at this zone right here. Now, this zone, look at that. Once, twice, see that precision? Let's take a look here. 3 times, okay? 4 times. This is more than enough. Even if you have these sometimes, it's totally fine as long as you have strong reactions like this and you know that price is respecting that zone, right? So everything clear for now, guys? Good. So we didn't talk about the setups yet, okay? We have a failed setup where an engulf fails. How do you take back your losses and make some profits? And we also have a full margin setup, which rarely happens, but when it does, you better full margin the shit out of your account, right? So how do you multi-time frame your engulf? Now, since we know how do you mark an engulf, you have 2 conditions to it, okay? What's the third one? The third one is basically not about the engulf, but it's about the structure. In order for you to say an engulf is good, okay, the high of it, if you want to sell, basically, the high of it needs to break 2 lows, right? It needs to break 2 lows. Here, as you can see, it broke 1, 2 low, right? Okay, you don't want to take this. You don't want to take an engulf that has only 1 breakout. So we need 2 breakouts. Some of you might be confused right now. How is this considered a breakout? You would tell me, oh, the V level is here. But when structure, use of the engulf, you want to break the low of a V level. Okay? You want to break the low of a V level. Now, as you can see, this is the low. It's not this. We used to work with the line chart and say, oh, this is a break. Okay? This is not a break, only if we go below this wick, right? So here, as you can see, this is the first breakout. This is the second breakout. The more breakouts we have, the better, but 2 is so strong, okay? If you have just 1, do not sell. If you have just 1, you know that price is gonna fail, okay? You know price is not gonna basically give you a sell. So this is the structure condition. Also, it can be broken with a wick. I'm gonna give you an example. So price can have 2 highs, right? And then do this, right? You see these 2 A levels, 1 A level, second A level, the wick of that, they both got wicked. This is still a break, okay, guys? This is still a break. And price does pull back and then eventually go up after you take your buy. So this is also a break. So you want to look for 2 breakouts, okay? 2 breakouts, and then a pullback to your engulf that we're going to be multi-time framing now. Okay, we're going to learn how to multi-time frame that engulf and spot if it's good. We can use some confirmations, but I don't do that. I take high risk entries. They are not really high risk, but if you use confirmation, the reason why you don't like them is because my entry is going to be higher. Okay, it's good to have a high win rate using confirmation, knowing that price is going to your direction, but I don't like large stop losses. Okay, so yeah, so here you would want to wait for a breakout, okay, 2 breakouts basically, and then a pullback, and then that's your entry. This is what some of you were asking me. What does BPE means, right? BPE simply refers to breakout, pullback, entry. That is it, okay? But you have to follow the conditions. You need 2 breakouts, you need the ISL, and you need the historical data of a certain engulf. Now, how do you time frame your engulf? What time frames do you work with? Now, you can start from the daily or the H4. So basically, the daily is just for the direction. You're not going to enter from the daily or even refine the daily. So as you can see here, we have a push down, right? We have a push down. So that push down gave us what? Gave us the first breakout, which is right here, the second breakout, which is right here, okay? Now you start always with the opposite color candlestick prior to the down move. So if the down move is bearish, basically red candles, you want to start by marking the blue candlestick, right? So this right here, you check the low of that, All right. Sorry, is it back again? Where did I stop, guys? No, not internet issues. I basically misclicked the control. So, okay, nice. So let me just repeat that. So for the daily and the H4, you're only going to use that for direction, right? You're only going to use that for direction. You can use the daily alone. You can use the H4 alone, right? So you don't have to combine both. Or you can use the classic storyline we were using before, but the only difference is that you can't predict big move before the breakout. Simply what we learned before is this: a daily level, H4 external breakout, and then you know price is going to start going down. But if you have an engulf here, right, and we go in it, you can basically have lower chance of starting a bearish storyline, but more precise. So if you wait for the H4 breakout, now you know like 95% we are on a bearish storyline. But if you just start looking for sells inside the daily engulf, you're gonna have sell-offs about like 60 to 70% hit rate, right? So yeah, that's the only difference. But it's best to know early, right? So you start by this candle. You check the low of that candle if it took the previous low of the previous candlestick. Now in this case it didn't. You want to go one after. Now you have your daily engulf. Now if price goes in there, what I would like to do is I would like to start looking for sells and would expect any buy to get broken, right? If I'm gonna buy right here, I'm basically gonna expect the buy setups to get failed, right? So yeah, how do you refine? Okay, how do you refine? Let me show you an example here. How do you refine? So sometimes, here's an example. You have a V level that got broken right here. That's the first breakout. Where is the second breakout? Second breakout is just here, okay? It's not this, because this wick took this low right here, so that's one breakout. So, okay, just forget about the line chart and having two lows getting broken or something like that, okay? So this is the first breakout, second breakout. How do you refine your engulf? Now, in this case, it's this one. It's not that one, because that low didn't take this low. But you have this low taking this low, right? So the weekly, you refine it to daily. You only need 2 time frames before you say that the setup is valid. For how many time frames can you refine your setup? You can start from the weekly and refine it all the way down to the M5, okay? You can use this setup only with M5 and M1 for scalps, but just know that you're gonna have a low win rate. You can use it for M15, M5, M30, M15, or you can use you can start from H4 and refine it all the way down till the M5. I'm going to show you all the setups I've taken here, okay, after we're done with this example. So as you can see here, this is the weekly zone that price reacted from. Now let's precise and see where exactly it reacted from. So weekly, you go to daily, okay? What are you doing daily? Here's an extra thing. So price going up, boom, and then pull back, boom. How many movements do you have inside the weekly using the daily time frame? So you have the first movement, pull back, second movement. Which one are you gonna get your engulf from? Is it from the first movement or second movement? Always the second movement. Why? Because the second movement basically makes the first movement unrefresh, even if it didn't wick it. As you can see here, price did not wick any of this area. I mean, we don't even have a valid engulf. As you can see here, this low didn't take this low, so we'd go to this, and that would be our engulf. But this one is inside the second movement, so it's best to start from this candle in the second movement. Okay, so when you have the first move, second move, you always want to take the second move, right? And you start always from the opposite color candlestick. You go pick this one, and this is a valid engulf because it has ISL. Also, historical data, rejection, 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 rejection. See that? Price is respecting that zone a lot. So you want to go down to the H4. Okay, you want to go down to the H4. Now, the H4, what does it have? It has first movement, second movement. You always go to the second movement. You start by this bullish candle, the low that took the previous low. So that is a good zone. You can even go down to the H1 and boom. See that? Look at that precision, guys. Okay. This is a 400 pip down move. Okay. It's a 400 pip down move. Any questions for now? Everything clear, guys? Amazing, amazing. All right. When you go to lower time frame, we need to check for ISL. Yes, you need to check for ISL on all the time frames, even on the refinement. Even on the refinement, you have to check for the ISL. Okay. Oh yeah, one last thing before we go to the examples, which is when you have a setup, right? And then here you're gonna wait for price to pull back, buy. What if this happens? It breaks. You're gonna have your engulf here. Oh, I took a loss. This strategy doesn't work. No. It's supposed to fail sometimes in order for you to sell again, right? In order for you to sell again. So when price breaks below it, you're gonna cut your loss, and then you wait for price to pull back and then sell again. Okay. But what happens if it goes up again and hits my stop loss? Now here's your full margin setup, right? This looks like an HNS, a head and shoulder or QM or whatever, right? So if you have an engulf that you took a loss on the first try, a loss on the second try, the third attempt is going to be 100% going up, okay? And this is a full margin setup. So yeah, how do you know that the engulf has failed? Simply by breaking below it. It's not by a wick, okay? So if you see this, the setup is still valid. What I personally do is I put my entry, basically I don't really enter on the beginning of the engulf. This is for the next session. On the next session, I'm gonna show you how to enter here in the middle of the engulf using some precision concepts, right? But for now, you don't need that. You need to master the structure and basically how to mark your engulfs. So I usually put my stop loss just like 2 to 3 pips below the engulf or above the engulf. But if it hits it and wicks it, goes back up, it's my stop, goes back up, I know that the setup is still valid. So what I do is I'm going to enter again with a stop below this wick, right? If that hits again, then the setup has failed. But let's say I'm still in the trade, right? And I see this. Price breaks just below it. I'm gonna exit, right? I'm gonna cut my loss. I'm gonna wait for price to retest, and then I'm gonna sell. Yeah. So by which time frame that break? It doesn't matter the time frame of the break. Okay. If you want to look at the H1 double breakout, you're gonna use the H1 engulf and refine it all the way down till the M5, or you can just refine it down to M30 if you're satisfied with that range. Okay. So yeah, let's take a look at some setups we had right here. Okay, let's talk about the first one. As you can see, the first one is 130 pips trade. This is a sell, okay, into a buy. Sorry, I think that's 3 setups. Yeah, that's 2 setups. That's a sell to buy. How did I take this sell? So as you can see here, price had first movement, pull back, second movement. And this second movement, what did it break? It broke this V level, the wick, and it broke the second level, right? So since we have 2 movements, 1, 2, which one are you gonna pick? You're gonna pick the second one. You start by the bullish candle. This low took the previous low. You're gonna push it all the way to the right. So you refine that down to the M30. I don't want to go there because it's gonna be a lot messy to basically scroll back up. So that's the sell. Where is my TP? My TP is to the next EG setup, right? My next engulf setup. Now, as you can see here, price went up. It broke this high. Is that enough for it to react from there? No, it's not. So we must go lower. Lower where? As you can see here, we had a bullish move that we broke this A level right here, and we broke this second A level here. We have a third breakout, fourth breakout. We have 4 breakouts. So what you do is you start by, give me a second. You start by starting with this bearish candle, right? And you ask yourself, did this high take the previous daily, candle high? So in the buy setups, you always check for the high ISL, okay, not the low. You're not going to check the low if it took the previous low. You're going to check for the high if it took the previous high. In this example, yes, it did. So you're going to draw that to the right, and that is your buy. Now, some of you might ask, oh, but I have wicks in here. It's not fresh, bro. How do I take buys? It's not fresh. No, it is fresh, because it's only unfresh if it touches after the 2 breakouts. Where is this? Where is the second breakout? The second breakout is right here. This one doesn't count because it's after. Okay. This is the second breakout. Did price ever come back after the second breakout? No, it didn't. So it is fresh. Okay. Now it came back after the first breakout. Does that matter? No, it doesn't matter. Okay. It's still valid. So this is still fresh. Price comes back from my sell to my buy right here. Okay. Where is my next setup after all of this? Okay. My next setup is right there. As you can see, you have a bearish move where we broke this low and we broke this low as well, right? So you start by this candlestick and then you go to the next one because that's the one that has ISL. Now I'm going to talk about how I got my entry from the top. Okay, H1 to M30. Let's go. M30, you start by the bullish candle. And then did it take the previous low? No, it didn't. Did this one take the previous low? No, it didn't. So did the last one take the previous low? Yes, it did. That's the candle I'm going to be marking. You go to the M15, right? On the M15, what do you have? You have, check this out, right? You have first move, second movement, right? So in this second movement, if you can see, this low took the previous low. So originally, you can say that this would be your setup. But on my MT5 broker, this low did not take the previous low. I always have to double check with my broker. So what I did when I marked that zone, I started basically from the first move. Okay. When you don't have an ISL on the second move, you go to your first move, even if it is unfresh. As you can see here, this is where we're going to start from, the bullish candle, the low that took the previous low. So you're going to refine that down to the M5, right? Now, as you can see, what does the M5 have for us? So you start from bullish candle, and then you check the ISL. As you can see here, we don't have the ISL, so you can go to the next candlestick and draw that to the right. So price tapped into my M15, missed my M5, and went all the way down. All right. So I was personally satisfied with this much of stop loss. Okay. I personally was satisfied with that. That's why I didn't wait for the M5. I don't want to take, basically, I don't want to miss my trades. All right. But if it goes there, I'm definitely adding more positions. So it depends on what you're comfortable with. So that's how I got my entry in there inside this whole H1 zone. Okay. Instead of entering here with a huge stop, I just entered there. All right, guys. So where is my next setup? Why did I put my TP here? Can someone spot that for me? I'm gonna give you guys 2 minutes to get the setup. Not even 2 minutes. You have 30 seconds to get me the setup. Why did I TP here? Take a look very closely. Okay. So what are you referring to these, Kevin? As 2 breakouts? Yes, correct. Now, as you can see here, no. That would be correct if the example was like this. Again, look at this. Focus, bro. Start by the bearish candle, right? Now, first of all, you have the 2 breakouts. This is the first breakout, the wick, we broke that. And then the second A level, we broke that. Now you always start with the eating candle. They call it the eating candle. Basically, it's the bearish candlestick before the up move or the bullish candlestick before the down move. As you can see, you always check the high for the buys and check the low for the sells. Now the high took the previous high. You already have your setup. You're not gonna go 2 candlesticks more. This would be correct. I see your perspective, Gan. You marked this candle, but this is valid. You see, this is valid. You don't need to go there. You get me? Nice. Now you have the first breakout, second breakout. That's my TP. Look at why I entered for my buy, guys. Boom, magic. See that? Magic, guys. Entered for buy. So sell, we're done with that. Okay, we're done with the sell. So now into the buy. We are done with the buy. Now I have a small sell right here. If you can see that, I took that on the M15, refining it from H1. Now if you can see here, you have engulf. No ISL. Okay, 2 breakouts, 1, 2, 3, 4, 5 breakouts. So you refine that down to the M30. You go there. Okay, M15. Okay, the M30 zone is smaller, so I'm just gonna keep that. So that's where price went down. If you can see, let's just put this here. I got my sell right here into my buy. This buy right here. How did I get this buy? How did I get this buy? Now, this bullish move, this big bullish candle, it broke this high, it broke this high, and it broke this high, right? Now you start by the eating candle. That is my buy, right? Now we covered the buy. Any questions, guys? It's that easy, guys, okay? It's that easy. This sell is for the next session. I'm not explaining that today, okay? This sell and this sell, I'm gonna explain that right now. If you go to the H1, you can see price has first breakout, second breakout, okay? And then price pulls back to your engulf. It simply fails, right? When it fails, it failed here basically, it visit it again, and then we sell. Now, here's a tip. When you have a big wick on higher time frame AGs, engulfs, just use the wick, okay? That's why I had my stop here. Now, when price went down, we have a failed buy setup. As you can see here, in this bullish move, you have 2 breakouts, 3 breakouts. Okay, price pulls back to the ISL engulf. It's not this, didn't take the high, not this, it is this one. Once it broke below, visit again, you take your sell. Okay, guys, simple as that. Could the eating candle, eaten candle only eat one side of the previous candle? Yes, you would only check one candlestick before. You're not gonna check 2 or 3 before. So basically you only check the previous candle. So for example, this one, you check if it took this low, not this one. Okay, and when you go one step after, basically if you go to the next candlestick, you're gonna check if it took this one, not the first one that you had marked out. Okay, so yeah, I hope that clears it out for you. I think I've had the QM set up, the full margin set up for you guys, right? I think it's this one. Yeah, I think it's this one. Yeah, it's this one. So what did I have here? Here I had a very large flip. So first breakout, second breakout. Price did what? Pull back. I lost. Okay, it even closed above perfectly for a buy. It went down. I bought. It failed. Once it broke here, I put full margin sell. Look at that beauty, right? It worked perfect. That's perfect. For the next setup, it's still the same BPE, right? Breakouts, pullback, and she's great. I don't even think I have to explain these setups anymore. So practice your setups, okay? Practice your setups until our next session. So if you guys have any questions, please let me know right now, okay? I don't know about the win rate, bro. I don't count my win rate, but it depends from week to week. Also, when I check the stats or performance on any of my brokers, I can't really see the exact win rate since I layer, okay? Because when you layer, it will count as many setups. Basically, if you have a zone, okay, and you put like 0, 1, 0, 1, 0, 1, 0, 1, and they all win, basically you have 4 wins on your stats or performance of your broker. So I don't know. No, storyline is important here. Storyline is important. So for the exits, if you're flipping a small account, exit on numbers wise. So if you flip in, let's say $100, if you see it goes to 500 or 600 close, okay, you don't need to wait for it to go to the next EG setup. But if you're trading a prop firm or a normal capital and you're risking 1%, 10%, whatever, something like that, hold it to the next setup, right? Hold it to the next setup. So yeah, the eaten candle, not eating, eaten. It's the eaten candle. Eaten candle. Okay, guys. So the eaten candle is basically the opposite color of a certain move. So if a move is bearish, the eaten candle is the last bullish. Okay, that's simply it. Okay, so this buy, you will not find the setup because we didn't talk about the failed ISL setups. Okay, this sell right here, the very small sell, it was from the M30. As you can see, first breakout, second breakout, pullback, entry, right? So yeah, the same thing. Guys, here, M15, which is the last setup. ISL engulfing, price went there, no sells, breaks, pullback, entry. Okay, that is it for today's session. We basically covered 75% of engulfing knowledge. Okay, in the next session, we're going to be talking about risk management, how to flip accounts using EG, how to enter sharply, okay, when you have a large zone, how to pick a very good point to enter from, and yeah, that will be it. So any other questions, guys, let me know before we cut our call.